by the government to the young people who want to get involved in farming? Is it enough? And how are NGOs like the NGO you work for ensure that young people get funding? How are you working closely with the young people, in collaboration with the government?
Thank you, Brenda. I've heard the CS make that statement, and I've also heard what one of the youth panelists' sentiments are all about. But Brenda, here we are discussing the issue of financial inclusivity. And there are things that we will need to address. For example, if you look at the 2019 Kenya Banking Industry Shared Value Report, and you look at the data that paints a picture of the sectoral gross loan allocations, then you realize that it is easier for a bank today in this country to be able to give you a personal loan and not to believe that you have a business plan that you want to do an agribusiness enterprise around. So that's a systemic issue. And what we need to realize is that when you see government put its money to support youth in agribusiness, it is actually a symptom of a sector that has perennially failed to attract commercial financing. And the same report I'm talking about tells you about how banks treat collateral. Today, it is easier for a bank to give you loan if you, for example, produce household furniture as a collateral than when you have, for example, an animal asset, like, let's say, a dairy animal at a farm. So what I hear the CS talk about is a situation that, yes, it is good for government and development actors to be able to plug in that gap by providing startup capital. But economists will tell you that if you have financing that is not within the commercial and market system-based financing circulation, then that becomes unsustainable. However, because we need to support the youth, that is a good starting point. And I'm also happy to hear that the CS is saying that these youth, once they are organized in common interest groups, they will graduate to market interest groups. And that means that they should be able to graduate off that startup, from that startup capital, so that other people get an opportunity. And you realize that when we go that way, then we should be able to graduate our youth to access competitive commercial financing. And competitive commercial financing is not just financing that is available from commercial banks. It could be from SACCOs run by the youths, as long as it's attracting competitive interest. It could be from microfinance institutions, although our microfinance institutions tend to be a little exorbitant in terms of the interest rates that they charge.
All right.
Now, you've asked, so just as I conclude, Brenda, you've asked about what do we do, for example, as NGOs. One thing that you realize, and the CS has alluded to this, is that as much as we talk about financial inclusion, there is a missing aspect of the readiness of the youth that wish to engage in agribusiness to be able to competitively apply these loans that they get, either from government or from NGOs or from crowd financing or whichever source that comes from. And what we do critically is to support capacity building in terms of financial literacy. A lot of microfinance institutions today that work with the youth will tell you that they actually put an investment in capacity building for the youth so that they can be able to keep verifiable records that can be able to support their financial planning. Right. They should be in a position to write competitive business plans so that they are bankable. And that is where we actually come in as NGOs. We also link them to the sustainable finance mechanisms that are available so that they know from the start that investments have to be sustainable and investments have to work within a commercial ecosystem.
Okay, let me bring in Mary Njeri. And just before Mary Njeri, you responded to my question, I'd like to get a response here from Madam CAS, just in a minute, Madam CAS, because Mary Njeri also needs to weigh in on this. When you're giving the financing to the young people, do you look at the sort of agricultural activity that the young person wants to invest in before you give a certain amount to this person?
Thank you, Brenda. As I said, let me just make a bit of comment based on what Jacob was also put forth. As I said, we have 16 programs within the ministry. Different programs have different design addressing different kind of challenges that the youth say they have. As I said, we have a program that is called Enable Youth, which we shall be rolling out in the next few couple of months, because right now we are just concluding some bit of the structure. And what we are saying about Enable Youth is some programs are addressing financing in terms of grants, but the others where we are saying we are going to give you a loan at 0%, another one at 5%, and what we're also doing is the government is investing so that our youth can be considered as a bankable kind of a group. So we have what we are calling the risk guarantee fund that we shall also put forth, so that our youth can be able to access commercial loans through the financial institutions. So what we are saying is we have tailored different programs for different kind of situations, from grants to upscaling you to get from the level of a CIG to a producer, to again helping you be able to borrow commercially, and also to be able to borrow at a certain an interest, 5% interest, and again 0% interest. So we have all these kind of tailored kind of solutions for you to be able to onboard.
So Mary, is there some sort of training?
Then the other,
let me bring in Mary just for a while. Mary, is there some sort of training that young people go through before they access this fund, so that they can be told probably where you're living, your location of residence is fit for this sort of agricultural farming?
Yes, thank you very much. Definitely, there is a lot of training that youth require. Sometimes the issue is not even access to finance. Sometimes it's the skill level for them to understand what kind of resources they require to do their businesses. Now, we are also looking at how to assist them, besides giving them the skills of financial management, how to run businesses, entrepreneurship training, how to identify business opportunities, writing good business plan. We're also trying to help them to develop business models, because financial institutions want to see a business case. And a business case is what will make them attractive to the funding institution. So if they do not have a clear business model and you do not understand the numbers they're providing, for example, they're talking about this is a business venture they're going into, as a person appraising that business plan, for example, you do not see how the cash flows they're talking about are realistic in terms of how you understand that business. So we try to help them to get to that level where they can be able to really understand their business and understand the market environment, provide them with market linkages, because without a market, you will be financed, you will do the business, you will not be able to repay your loan because you do not have access to market. And it is by selling whatever you're producing, or whatever business, in whatever trade you're doing, it is by selling that you will be able to repay your loan. Now, another challenge that youth are facing, especially with some of the funds, is not only access, but how quickly can they get the money? If I'm going, for example, into a production kind of activity, there is a time frame within which I need the resources to buy my inputs before the rainy season, for example, is over, for me to be able to do meaningful business. So you find that you apply and the process is so long before you can get the money. Now, as a recent study that was done by our organization, Food and Agriculture Organization, identified the digital money platforms as the most attractive to the youth. At 67% of those patronizing the digital financial platforms are the youth. Why? Because the turnaround time is very, very small. You can apply for a loan and within a few hours you have the money. So it is expensive money, yes, but they prefer to go there because of the efficiency in terms of processing. In as much as those loans provided in those platforms, so for example, the Mshwari, the Fuliza, they are nano loans. They're not very huge loans, but they are accessible. And that is what borrowers are looking for.
All right.
And then another challenge we have is the kind of financial products that are there with financial institutions, especially the conventional financial institutions, the ones that are managed by private sector. most of the times you'll find that they're not responsive to the nature of agribusiness that the young people want to go into. Therefore, it becomes a very big challenge for them to be able to borrow that the money and repay it and use their business venture to be able to serve.
All right, Mary, we're bringing this conversation to an end, and I just have like 3 minutes to go, so I'll also ask my director just for like a few minutes. I'll give you a minute each to respond to this question. COVID-19 is affecting young people involved in farming. I'll begin with you, Rogers. So what can the government do to ensure that young people are still safe making money during this time of COVID-19 in a minute? Roger?